Bitcoin sitting at $55,000, and the bulls are trying to put in a little bit of a bounce on these short time frames. But the question is it enough to change the medium and the high time frames, which are still in a little bit of a tough place? Well, we're going to assess this and a whole lot more on today's show. So make sure you smash the like button, hit the bell notification, and definitely subscribe to the channel. Here you have the banter bubbles looking at that hourly chart over here. And of course, as you can see, a lot of the coins are attempting to bounce. A little bit of green over there, but we are going to be coming into key resistance levels just about 1% away on Bitcoin. So I'm going to give you those low time frame levels towards the end of the show, and then we can have a look at the high time frames, how this all ties in, and especially focus on the stock market, because there's something very, very key that's going to be taking place this week. Daily, of course, trends still remain down, weekly trends remain down, and even the monthly trends are still under quite a lot of pressure. So what is the major important thing that we need to be focusing on for the stock market? Well, if you watched my show on Saturday, I already outlined this, and it is the TD Sequential, the 9 count over here. That is from a top trader in the stock markets who pioneered this trading system called 𝗕𝗬𝗕𝗢𝗕, right? The 𝗕𝗬𝗕𝗢𝗕 9 count over here. And what that suggests is that when you get onto a 9 count, that usually marks either a pause or a major top within the market, and you'd be looking for a 1 to 4 candle correction. Now, the reason that I'm mentioning this to you is not to make you panic any more than you may already be within these crypto markets, but simply just to outline that there is still downside risk, especially with those trends being towards the downside, and it is something we need to be careful of. Also, not only that, but the DXY, you can see, has been caught within this wedge formation. This is within a higher time frame range level where we're still waiting and hoping to see if this can deviate back below the gray box area. That would be a deviation below the range, therefore meaning that you're viewing this entire move as a big deviation into the range, and that would be bullish for crypto. But we need to see a major breakdown on the very, very low time frame. What you're seeing for the DXY over here is it is now fast approaching this supporting trend line, which has been holding those higher lows throughout, and we might get one more spike towards the upside, and that would be in alignment with, of course, the TD Sequential 9 top that you're seeing on the weekly time frame for the stock market. So in terms of the sentiment, where are we at for these markets? What are we looking at? What can you expect next? Well, you can see that the sentiment has dropped down pretty significantly if you look at the sentimental analytics signal that we have over here. Ultimately, the last time that we saw this low was on the 19th of June. To give you some perspective, where were we on the 19th of June? Well, Bitcoin was trading at $26,500, and that proved to be a wonderful buy area where we formed a major range low at that particular point in time, and there was bullish absorption throughout. Bears were trying to break price down, but there was bullish absorption. It couldn't happen, and consequently we led to a pretty big move towards the top side. So with that being said, ETH was at 1.7, Solana was at 15.45, right? Can you believe that? 15.45. And as per Blockmates over here, he simply says it does make one think, right? Is this going to be a major opportunity? What my messaging would be to you is don't rush. That's it. I would say just sit back, relax, allow the trends to start to slowly shift. Take your time. Don't ape into positions. If it is like the 26K range low that we had, well, we spent a long time there. It wasn't a V-shaped recovery out of that area. And there's no reason to believe there will be a V-shaped recovery within the crypto market right now. Simply put, because of what we're seeing with the 9 top on the stock market, with the DXY as we're coming into the supporting trend line. To give you a bit more perspective of the DXY and the weekly time frame, well, this has been the range levels, right? You have the gray box over here, which represents at least that range high level, and we're really looking for a break below that. But this is major support, which means that you buy support and you sell resistance, right? And therefore, if you're coming into a key area of support with the upsloping trend line on the low time frame, with the high time frame gray box over here being your strong horizontal, and on top of that, the midline of the rising parallel channel towards the upside, that being also additional support, then the answer would be there's a lot more support on the DXY right now, and a lot more reason to buy the DXY than there is to sell it. Now, we're simply anticipating a deviation within this region, but we need to be patient and wait for the full confirmation of that breakdown, because people that try front run this will ultimately get wrecked. back onto sentiment, what we're seeing within the stock market as well as the fear and greed index sitting in that neutral territory. We were on the previous close sitting at a 44 in the slight fear zone for the stock market. If the stock market does put in that 1 to 4 week correction, well, you would expect that this is going to move further down into fear. That would create a little bit of a cascade effect into the crypto fear and greed index, bringing that down lower. And then I think we could be well positioned for some major generational buying opportunities. But I think not yet, right? If you look over here at the fear and greed index in crypto, well, we down to 28. Yesterday was 29, now down to 28. One more sweep down could bring that a little bit lower. And your liquidity is now jumped all the way to the top side because, of course, a lot of people have started to build short positions and are aggressively shorting the market. I was having a look this morning and I actually saw that it's been relentless selling for exactly 30 days with absolutely no breath for the bulls, right? It's like they've been held underwater and every time they're about to lift their head out, the bears just dunk them once again. Ultimately, there will eventually be a snapback and then you can start to target these upside liquidity zones. These are going to be very significant levels to get back above. And again, that's why you need to wait for those closes, right? If you do spike up into 65K over here at the first level of liquidity, the question is, do you close at that level? There's currently sitting 1.13 billion worth of liquidation levels over there, meaning if bulls can spike price up, well, you've got about 1.13 billion worth of short stop losses over there, so shorts that have stops. And as per the comments over there, I see you guys saying short squeeze incoming. There is a possibility, but you need to wait for some key levels to be broken before you can say that that's a fact, right? Because we've been looking at the potential for a short squeeze for some time, but there's been no trigger on that yet. It's been relentless selling from the bears. Next level of liquidity is going to be coming up over here at $67,000, and then the one after that is at $70,000, which is going to be around those range highs. Now, the good news is that in terms of the longer term bull bear market cycles, I do believe that we're still within a bull market with probably anywhere in the region of 12 to 18 months left before that bull market is finished. And I would expect that that bull market would obviously continue to new highs, taking out all the topside liquidity sitting above $70,000 to $74,000, and therefore there are going to be better days ahead. So I'm not the wolf over here, says Bitcoin traders would only realize losses from selling. Their margins are negative 17%, the most negative that we've seen since November 2022. As a reminder, that was just after the FTX collapse, which proved to be one of the best buying opportunities, where Bitcoin went down to $15,500, and we started to look to flip long at 16,800 when we broke out of the falling wedge formation and reclaimed that key horizontal range low. So these are things that we need to look at right now as well. There is some signs showing that, you know, things are definitely reaching oversold territory, but with that being said, you also don't want to fade the trend, right? If the trend is down and strong towards that downside, well, you don't want to start blindly buying and adding all the way lower and lower and lower. It's better to be safe and wait for confirmation of the breakout higher and the reversal of the trend, right? Otherwise, for all you know, this trend could continue all the way down to $40,000. And I mean, ask yourself, if you keep adding now all the way down to 40, would it have not been better to wait for price to hit $40,000? Confirm the breakout, which means you would on the confirmation probably buy at $44,000. It's a much safer and a lower entry than what you'd be getting right now. So he says, this is a buy and hodl zone. We haven't been this low in profit or loss margin zone since the Pico bottom of the previous bear market. Now, these are good signals to see, assuming that this is still a bull market and we're following that cyclical 4-year path, the seasonality approach. That would suggest, yes, this is a good zone. But if you look at what the charts are saying and you simply mark at the various different levels, well, what this would suggest, we have Bitcoin on the left-hand side, Ethereum on the right-hand side, and ultimately what this would suggest is that we're starting to break below the 7 moving average. Now, that just means a deeper correction. If you do go in for that deeper correction, keep in mind the 20 and the 50 MA are currently rising with each passing day. And you can see there's going to be major confluence that would be met possibly in the next month or 2 months, anywhere between that $40,000 and $45,000 region. So I do implore you guys to remain patient. If you are sitting on a lot of cash and you've been waiting to get into the market, this is very, very common from and around that halving cycle region. Usually it happens before the halving cycle. Sometimes it can happen post-halving. You do get a much deeper correction. So to use our ruler and give you percentage drawdowns, well, you'd be looking at potentially another 27% for Bitcoin on the left, and for ETH around 20% downside. You do have your MACD histogram, which is currently trending down. You have the RSI on the monthly scale, which is now also turning down. You also have on top of that the stochastic RSI for both ETH and BTC also turning down. So there is definitely still downside risk, and you need to be careful of that. Key events happening this week, I think something noteworthy to keep in the back of your mind. Write it down in your calendar. Jerome Powell testifies. That's going to be happening tomorrow. OPEC monthly report happening on Wednesday. June CPI inflation data Thursday. Big day, right? Thursday, mark that off on your calendar event. That is going to be super significant. June PPI inflation on Friday, also very important, gives insight into what's happening with the true inflation readings, is going to be the PPI. And then we have the Michigan consumer sentiment data on Friday. And all in all, you got 9 Fed speakers which are going to be speaking this week. So as he says over here, buckle up for a busy week ahead and expect volatility within these markets. Now, in terms of our very simple bull bear market indicator over here, we've been using the 21 exponential moving average. Feel free to go back at home by yourself, work it out over here. When price is above it and it's angled upwards, it's all good. When price is below it and it's angled downwards, expect deeper corrections to the next level of support, or potentially in some cases, even a full-blown bear market. Now, I don't believe that we're in this phase over here where we'll see a full-blown bear market. I do think this will just be one of those situations where you see a much deeper correction than most people can handle, and consequently the bull run will continue. But first you need to hit some major levels. Now, some major levels, you may see something like that in a very serious case scenario. Again, that bringing price down to $48,000, maybe a couple of sweeps below, which means you could see as low as $44,000 or $40,000, but hopefully not on a closing basis. We don't want to see any closing candles there. So this I wouldn't rule out, and it wouldn't end the bull run for me. I would just think a major correction leading into Q3, late Q3, beginning of Q4 this year, meaning, you know, sometime in September, October, November. I would expect that the bottom would be in, wherever that may come, and will be onwards and upwards, continuing this trajectory. I do want to also remind you that in terms of chart patterns, which you know are not entirely reliable, but a little bit of a guideline for what you can be looking at as something as a potential, well, you can see also there is a pretty massive cup and handle formation, and that would actually form a perfect handle for that cup and handle, which would have a measured move breaking out, which we can already work out over here based on the bottom of the cup all the way to the neckline over there. All you have to do is copy and paste that. Let's assume the breakout occurs from somewhere down here. Well, that would give you a measured move target into the $100,000 territory, around 105,000. It totally depends on where the handle confirms the breakout. So a lot to look at over there. Stochastic RSIs have been fully reset over here, which means that there is going to be a lot of momentum when price turns back up to quickly start getting sent. But for now, you need to remain patient, because your BBWP, the Bollinger Bands, are starting to expand away from each other, and that shows implied volatility. Volatility is coming into the market. Here it is crossing above the 10 percentile mark, which is already your first warning sign and indication that the real big move is taking place. And unfortunately, because the trends are down, you have to believe that that's going to be in line with that trend. This is medium to high time frame stuff. Low time frame will make the argument for also long trades in just a moment. So stay tuned. You need to figure out how these low time frames tie in with the medium and the high time frame. So this would be a very high time frame signal. If the white moving average gets above the 10 percentile mark, well, you know that the next move is well on its way. And all I want to do is keep you guys safe out there, right? So as not to be buying too early. Also, if you look at this signal over here and this indicator, well, simply we're using 3 different moving averages. I have the 3, the 9, and the 30 MA on. I have this put on the 5-day chart, and this is a very, very simple way to trade, right? If you are a swing trader and you want to remove the noise, it's super simple. When price is above, and you have it above the short, the medium, and the long-term moving average. So the yellow must be above the green and above the purple, with price above that. You're in a strong trending move. Bulls have full control. Well, the opposite is the same, right? You're leaving a very, very significant range that we held for almost 4 months. And when you leave a significant range like that, and price is now below all those key moving averages, well, that shows bears are in control and they could really get this thing expanding towards the downside. Now, you can make the case for a potential Wyckoff reaccumulation schematic where this would be viewed as the spring candle. Now, I'm not going to bring up I think I might have one actually, a tweet that's bookmarked, so I'll talk more about it in a moment. But if you do get that spring that occurs over here, the spring would mean a bear trap. Price comes down. In order to confirm that, we need to see this candle very, very quickly move towards the upside, closing higher. We have 16 hours, 54 minutes left to close this candle. If somehow magically this closes back on the top side over here into the range, well, then maybe, just maybe, that was a spring. You've broken back into the range. You make the case for opening longs and the bear trap and continuation higher. So as it currently stands, though, that is not the case. Bears are in control, just to make that very clear, which is why we showed that we're looking for the short position over here. But based on the candle wicks that we have, if you look over here, well, we have come back to fill some of this liquidity over here. And if bulls are going to step up, it has to be right now. At the moment, you still have short-term miners which are selling, and therefore the hash ribbons indicator by Capriol Investments continues to show selling pressure from those miners, and it is currently expanding, meaning, again, pressure to the downside. Bears are in control. This is another tool that you can use to see if bears are in control. And what it is over here is we're using the average directional index as the blue line, using the directional index for the bears being the red one, and then the green one for the bulls. Because the blue line is trending up, because the red line is above the green over here and expanding away, bears have full control. Very, very simple. Bears have full control. But with that being said, we know that the 200-day exponential moving average as well as moving average has become quite a meme within the market. A lot of people focus on that moving average. Now, I want to encourage you to focus on the angle of the moving averages. A lot of people don't talk about the angles of the moving average, right? If those moving averages start to angle downwards, bears are in control. If it's angled upwards, well, then you can listen to what Charlie BTC says over here, which is that in bull markets, Bitcoin doesn't stay under that 200-day exponential moving average for very long. And ultimately, it could still be a bear trap scenario. So let's have a look at it. What is the angle of this moving average? Well, we've outlined that it is a possibility that you see something like this where you start to break back above, and that will confirm the Wyckoff reaccumulation schematic. Breaking into the range low. Okay, break into the range low, you reclaim that 200. The 200 is currently angled towards the upside. The super guppy is starting to turn red, showing you that those low time frame moving averages are expanding. And if you look at the average true range, well, we hit this area of interest, and the average true range is expanding, showing you that the range is opening up. Now, this is not a typical indicator that people look at where you think, well, if you hit this and you bounce, price is going to go up, right? The expansion of that range just shows implied volatility, like the Bollinger Bands expanding away from each other. And that range could be opening up towards the downside, and this can still go up. So don't get confused with that, right? This is what we're currently seeing. You don't want to spend too much time over here. If you're a risky trader, well, a risky trader or investor would start to look for opportunities under here, expecting that there is going to be a snapback above, and that would have been a bear trap scenario. But if you're safe, wait for the reclaim. That's all you have to wait for. If you're somebody that's super safe, we can change the levels. Last week we were saying, well, you know, really you need to get back above this zone over here, and I'll make it nice and big for you. You need to break back above that candle. I would now say that, you know, you can probably start to get long already when you break back into the range, and more so if you can reclaim that candle over there, which is 60,439. Break back above the candle that was printed, the high of that candle on Thursday, the 4th of July. I think that would be a great zone to start to look for a new long opportunity. And you can say that, in fact, the bear trap has been confirmed, the deviation has occurred. But until then, of course, remain patient. Now, I know a lot of you have been hurt within the market. It is typical, even though, you know, you watch the show and we warn you and we say that this could happen and that could happen. At the end of the day, people still make their own choices when it comes to trading. So if you are somebody that feels that you've nailed every move of the market and you feel that you have a great trading strategy, I do want to remind you, this is a great opportunity for you, right? CoinW run their Prop W challenge, where you can risk very, very little money to get $200,000. So instead of going aping into leverage positions, you can see over here, the audition fee is only $300 to get $50,000 account. If you want the $100,000 or $200,000 account, well, that is $500 audition fee. So instead of risking $500 and getting liquidated in the market to maybe only make a 2 or 3x gain, feel free, use the link in the description below, go through to CoinW. At the top over here, you'll see, okay, I've lost that section now, but you'll see on the top here, there's a tab. I'll go to it in a moment. Click there, go through to the Prop W challenge. So it will look like this. There it is. Go to more, go to Prop W, and feel free to join, right? They're also running another challenge over here where you can get $1 million. Well, the prize pool is $1 million, obviously split between all the various different traders that come first. If you do want to participate, the event ends in 10 days. So that is for CoinW. Okay. Now, looking at that Wyckoff reaccumulation schematic, we've spoken about the 200-day moving average and the 200-day EMA. Bull markets, we don't spend that much time below. If you can break back above and reclaim that level, it'll start to look really good. In terms of Wyckoff accumulation and distribution patterns, well, this would also be in alignment with that, right? So breaking back into that range, this would look like the spring. If I zoom into what the chart would look like, it's like this, right? You go into the spring, you go into the back test of the range low as support, and then you go into your big moves towards the upside where you get a sign of strength above the range highs. That would be the equivalent of sweeping all of this liquidity, which we marked out over here. There we go. That would be the equivalent of sweeping all the liquidity on the top side over there, and will start to look really good for continuation. So keep an open mind. As I say to all the different members in Whale Room, I tell them, what I want you to do is when you approach a trade, try and view it from both directions. You might have a bias that you want to be long or short, whatever your bias is. I ask you to try and think of how you would execute that trade on the other side as well. Now, I'm not telling you to trade both ways, long and short. I'm just telling you to approach the market with your own technical analysis from both directional perspectives, and then you'll quickly be able to see where the probabilities are higher and take that trade with those high probability zones, right? So keep a close eye out on that. Now, you have major levels coming down here. In terms of that Wyckoff reaccumulation schematic, you would expect something like this then, right? A big move up. Failure to get back above the pivot level over here and a rejection from that zone, which is sitting at 56,391, could lead to the next move down, right? We haven't actually tested deep into this order block yet, which is between 50 and 52K. And we said if we do hit that level, expect there will be a major bounce. In terms of the selling pressure from the bears over here, you can see from pretty much the top over here to current price action, well, 33 days of relentless selling. At some point, there will be a snapback into this zone because, of course, this is a massive buildup of short liquidity, right? The shorts that have taken control will be looking to take profits at some point, and all their stop losses have been dropped, right? They're riding their, of course, price to the downside and dropping their stop losses, which become liquidity for the taking if price does spike up, as I showed you on that previous chart. That's something to watch for, right? So let's keep an eye out. Right now, you're kind of in the middle of no man's land. Hence, I say just sit patient, remain on your hands and just wait. If you do break above here, then you can start to warrant taking action. Alternatively, if you come deep into the yellow zone over here, that's another area of interest. So it's either there or there. In between here, pretty much for the medium time frame traders or the longer term guys, just wait patiently, sit on your hands. You don't need to do too much, right? Okay. Looking at high block capital over here, let's take a quick look. You can see a lot of negative delta on pretty much every single coin, right? I've marked off the main ones. Bitcoin, ETH, Solana. We've got Pepe, WIF, NEAR. I mark off Pepe and WIF over here because I want to see what happens with the meme coin sector, since it's mostly led this entire market cycle. It's been a complete outlier in terms of its performance. And of course, we can see that by just going over here onto the yearly time frame. Look at that. Bonk, WIF, Brett, these are some of the top performers. And one of the real world assets that we've called as well is OM, Mantra, also one of the top performers over there, continues to outperform. Therefore, we want to see when the market does start to turn, does that trajectory continue? Does the risk move straight back into the meme coins once again? Therefore, it will tell us where we should be bidding, right? So something to look at over there. Also, in terms of the, the lower time frame look back period, we can look at the liquidation levels over here on the 6-month time frame. The other one that I showed you was on the 1-year time frame. You can see you've come deep into that liquidity zone over there, and we have hit that zone. So therefore, potential area to bounce from, and that's where you can make the argument for the short squeeze. The other thing that you can look at is you got the VWAP, which is coming up right now on Bitcoin at $50,000 on the daily time frame. There's very, very little orders on the order book over here. I'm really not seeing too much buying that's stepping in over here. So something that we must keep an eye out on. And then in terms of the price action right now, you can see range bound, spot also just kind of flatlined, leverage jumping back and forth over here. Also, the open interest has pretty much dropped aggressively over here. So the question is, when this open interest starts to pick up again in the next couple of hours, when the market starts opening in the US time, and this spikes up, which way does price go based on the spike? That will show you. Are in the very, very low time frame, are shorts running it down, or are bulls going to try and step in? So I am keeping an eye out on that as well. What else? Okay, low time frame, these are the levels and ranges that I've marked off. So the 15-minute time frame that I'm looking at over here, I've marked off the range high for today's low time frame traders, 58,484. There it is. You can see that is going to be a key level. On the bottom side, we have, of course, where these candles close, 53,900. And right now, you have the 50 and 200 EMA, which is currently trending down, acting as resistance. And therefore, I'm inclined to believe that you're most likely to see something like this. We're crossing over into the UK session right now during the show. I think you could still see one more sweep like that. So watch for something like that. Low time frame traders, if you see that, you'll be looking for the longs over there up into the mid-range, and then you can leave a little bit on the table for the range highs. But in this current market environment, you really want to be super quick on your trades, right? You want to take them at the extremity, and you want to get in and out. I'd mostly work within this range level, and if we do break above, within that level, meaning if I took a long down here, I'm actually not going to wait for the whole position to get to the top side over there, because right now we're trading within a super tight range, which is mostly going to be for Bitcoin between 56,243 and 53,880. Those are the zones of interest, right? So if you are looking also, guys, for a new exchange to trade on, by the way, non-KYC, and you like airdrop farming, by trading on 𝗕𝗥𝗚, you actually are airdrop farming where you'll get up to almost 200,000 WXT tokens. Remember, a lot of these exchange tokens within the bull runs, especially the newer exchanges, have quite a major price appreciation. So I'm not advocating that you have to go and buy the 𝗕𝗥𝗚 token or anything, or the WXT token. You can simply get it for free by trading there. You can claim up your sign-up bonus, I believe, is up to $20,000 as well. If you do want a non-KYC derivatives exchange, the link is going to be below there. Okay, Bitcoin dominance still has a bearish divergence that's been building up for a long time. As mentioned, this will take time to play out, right? Before the major breakdown, in line with our thesis, we said sometime in the end of Q3, beginning of Q4, you might be looking for dominance to take a bigger hit towards the downside, letting those altcoins run. Here you have still ETH BTC downtrending, lower highs, right? Lower highs throughout. This is a very, very painful transitioning phase. It's probably going to take a number of months. Like I said, all the way into the end of the year, this will probably be one major reaccumulation phase for ETH BTC, breaking back into the range and continuing higher. ETH USD, though, in terms of next levels of support, well, this is what I'd be looking at over here. Now, if Bitcoin gets another leg to the downside, you have clear major support coming in at $2,626. That is a zone or area of interest to watch. Okay, total 3 cap below the mid-range level. Wait for the reclaim of that, and then you can potentially see a bit of strength come back into the market. But we need to see the total market cap increase in terms of new money coming into the market. And excuse me, as per the sentiment indicator, you can see it doesn't look like there's much new retail that's coming into the market. And if anything, we've just had the celebrities run an absolute mockery of crypto, launching their celebrity meme coins and wrecking the market. You may need to wait for that period to be completely flushed out, and therefore that does take a bit of time. But there are a lot of coins that are very strong, not only against USD pairs, but also Bitcoin. Now, there's a couple, we've been speaking about them a whole lot, and I really encourage each and every single one of you guys, focus on these strong coins, right? Don't mess around with the coins that are downtrending against Bitcoin or even sideways against Bitcoin that have no momentum. Look for the coins that have momentum towards the upside. Casper, that's one. Look at that. Casper BTC, pretty much straight uptrend. Solana BTC. Look, it's come from a very, very strong uptrend, and this one you can argue is starting to move sideways, but in terms of relative strength, we're seeing that relative strength still in Solana. Let's see something like Phantom, not good, right? Downtrending. Near, you can see over there, also not looking too great. Injective against BTC has been totally wrecked. DOT against BTC has been downtrending, right? Zeta, look at that, absolutely shocking. You don't want to be buying these types of things. So some of the strong ones again is of course going to be OM. Mantra Bitcoin, very, very strong, creating new all-time highs against Bitcoin. That's what you want to see. If you look at Ondo against BTC, well, you've come into a super key level over here. You are starting to close candles with a new swing low, similar to the Wyckoff accumulation. If you can spike back above, break back into the range over here, that could be considered a potential deviation, and you'll be looking for continuation higher. Which other ones do we have? Let's see, Fetch AI. Okay, Fetch AI. Maybe you get a bounce from somewhere around this area. Look, you would want to see it moving very, very soon. You don't want to take out this low and Fetch AI against Bitcoin. That was historically one of the stronger ones. Let's see, Bonk. Okay, middle of no man's land, whiff coming down. So lost a lot of gain over there. Floki, not great. Pepe coin, you don't want to break below these lows. So I'll quickly mark it off over there. That low that you see over there, you want to see Pepe start to bounce out of this area against Bitcoin very, very soon, or this could bleed all the way back down, and then it's going to start to look like a chart like Injective. This is why you need to view your charts at least weekly against Bitcoin, right? This is what Injective looked like, big pump up, right? Once it started to lose some of these key levels, it just continued to bleed. So please, guys, be very, very careful out there. Doge Bitcoin, not looking too good. Shiba Inu against Bitcoin, also not too great. And you guys know the gaming coins, right? New lows. Unfortunately, the gaming coins have been totally smashed against Bitcoin. What about Pendle was one of the strong ones? Is it holding up? Similar to Pepe coin, you want to see this move now. It's already starting to break down this key level, which is not good, creating new swing lows, and therefore you need to treat it as a range, right? If the trend breaks down, you focus on the range levels. Pendle could be coming all the way down to this zone over here, which is 38.44, the last 4 digits. We can look at the USD pairs as well. We do have a little bit of time. So again, Solana, one of the stronger ones in terms of the USD pair, holding up over here. Whereas, you know, when you look at some of these other coins, so look at Solana over here. What I want to show you is we'll mark off these levels, and we can use let's use this line over here. Let's just lock that in. Guys, if you appreciate the show content, please do me a favor, smash the like button. Also, let me know in the poll section what you think. Is the worst over for the crypto market? Yes or no? There is a poll section. If you want to see what everyone else voted, click on that poll section. It is over there. Is the worst over for the crypto sell-off? Yes or no? I want to know, you, the audience, what is your thoughts and opinions on what comes over the next couple of weeks? And then also, we have more than 2,600 of you live, 600 likes. Please help me out, guys. Smash the like button. It helps to get the content out there. Remember, I've been on Banter Plus, but I'm going to be on Banter again for a while. Let's let the rest of the guys know that I am actually here, so we can get the show back on the road. All right, let's look at some of the previous major drops that we had timing-wise on Solana, and then we can compare, right? So these were some pretty critical zones over there. That was March, May, and June. Now we can go to something like, let's say we go to DOT, right? Okay, and we go to March. Let's see, we mark off March, we mark off May, which was here, and we mark off June, which, well, let's say now, you know, June is just before July. So what are you noticing over here, right? This is just an example. What are you noticing over here? So in terms of March, what you should be noticing is this. I'm not going to do it with every single coin. This is just to give you an example. Where was Solana trading in March? Well, Solana was trading down here. Where was Solana trading in May? Well, now it's trading up here. Where is Solana trading in June? Now it's trading over here. Let's go to DOT. And you could do this with a bunch of coins, right? Where was DOT trading in March? Well, DOT was trading up here. Where was DOT trading in May? Over here. Where is DOT trading now? Down here. What do you see? Down, right? What do you see on Solana? If you look at Solana, up. So it is definitely holding some sign of strength. By the way, guys, if you do want to learn how I analyze these markets and how I think of these things, please go to the link in the description below. This is 100% free. I should be charging $4,000 to $5,000 for this course. Click Whale School over there. Join. You have 2 days. 8 hours left to go. We're starting with cohort number 1 with the first workshop. We already had the welcoming event last week, which you missed, but we're going to be having another workshop coming up this Wednesday. If you sign up, you can join that. You're going to get additional alpha in there. I'm really working hard to provide you guys with all the guidance that you need to succeed within these markets. So this is an example of one that is strong, right? This is an example of strength because over time, while all the other coins were going down, this is going up. Here's Casper, right? Now, again, let's mark off the level. So we look at where was Casper in March. Casper, that's the wrong tool. 1 second. Casper in March was trading over here. Where was Casper in May? Well, it did come down lower. Obviously, Casper was over here. Where's Casper now? So it is creating a little bit of a bottoming formation over there, seeing some signs of strength. Now, we did make the case as well in Whale Room. I went through this in a whole lot of detail, and we actually took the short trade over here. I updated you guys. I said, close out the rest of your profits. I do think you'll get a bit of a bounce. You got it. Once you broke down the range low on the hourly time frame, Casper were targeting down to 14 and then down to 13. I would still say the same. If Bitcoin comes down and you can get Casper in these levels, I really think long-term, this is a great play. It's in my top 3 biggest positions currently, Solana being the biggest, but bear in mind, guys, I'm a trader. I could cut that Solana position in one moment if I saw a reason to. I'm not a long-term investor that's going to be holding for years. Solana is my number 1. Bitcoin is my number 2. Casper and ETH are tied for number 3. Those are my current positions within the market. And I had a very substantial mantra position as well. This was one of them. So we can also have a look at this chart. You can see against the USD pair, every time price is coming down, you're seeing some signs of strength being brought up, now breaking above those range highs over there. That is looking good, right? That one's looking pretty decent. So look for those coins that are showing strength. Look for the coins that are rebounding. What other ones do we have over here? Let's just see if there's, let's quickly go to, what was it? Pendle. Let's go to Pendle USD just to see how that one looks. Pendle, since this was previously one of the strong ones. Pendle USD. Okay, spot. Let's go. All right, so here you have it, Pendle USD. I would not be bidding this because it's spending too much time here, right? You've lost the upsloping trend line. These were the key areas of interest that we marked off. You've already started to lose those levels. That's not good. You don't want to see that. You're coming into a strong horizontal area. I am going to clear this up over here because we don't want too many cluttered charts. Let's clean this up. Let's clean this up, and we'll clean that up over here. The fact that you're spending time in this region over here tells me that there's a good chance that you're going to go for another leg towards the downside. So if you are trading Pendle, please be careful, right? Pendle now, I would say, could potentially come as low as, if it doesn't get moving from here miraculously today from 340. Well, the next zone that I'm going to be looking at is $2.37. That's a pretty significant zone. And where do you get bullish demand coming back into the market for the safe traders out there who don't want to risk it for the biscuit? Well, what you're going to be waiting for is a reclaim of this region over here, that being $4.21. You want to see price get back above that zone. But price structure wise, it's spending days down here. It tells me it's probably going to continue down, right? So please do be careful. Okay, let's quickly see which other ones we can grab over here. You guys say Rune. Let's go to Rune very quickly. Rune USDT. How is Rune doing? Okay. So there it is, Rune. That was the level that we're looking for. You are coming into a major supporting zone. If Bitcoin does the break and gets back above into the range over here, this would be the equivalent of Rune breaking back into 380. That would confirm the deviation and start to open up the longs. Rune really gets moving if you can get above the breakdown level, like many of the candles, which is $4.34. I'm still remaining patient. I haven't opened a position. I still think you could see something like this. And then, boom, the break above. That will break the structure, get above those lower highs over there, creates a high, the throw back into this region over here. I'll probably end up buying slightly below $4, but waiting for full confirmation. So I think that's it, guys. I'll catch you all on the next one. I hope you all have an absolutely stellar day, and cheers for now.